stocks I'm buying January 2019 edition. Welcome in, guys, to my favorite series I do on the channel each and every month. 3 stocks that I am planning on buying in the upcoming month. The upcoming month being January 2019. It's the first 2019 edition. Hope you guys enjoy this. As always, let me know in the comment section what you guys think about these 3 stocks. I'm going to kind of go through why I'm bullish on these stocks over the long term. These aren't short-term trades where I'm trying to buy a stock and sell it off real quick. These are long-term investments, and I believe all 3 of these companies are very, very undervalued. So I hope you guys enjoy this. As always, hit a thumbs up. Let me know what you think about these stocks in that comment section. By the way, YouTube, I just realized I had never made you guys any type of Christmas discount on any of my courses. So I went ahead and made 10 coupons for my biggest stock market course ever created. The only stock market course you'll ever need. Goes into depth on everything I look for in a stock, as well as the mentality you need to have. Made 10 coupons for that. That's going to be the pinned comment down there. If you're one of the first 10 to get it, that's awesome. 70% off. There you go. Alrighty, guys, the first stock of the 3 is a stock I've been buying the past few months, and I've actually built this into my biggest position in my portfolios, and I plan to continue to do so throughout 2019. I think this one is a steal, and it is Facebook stock, okay? Facebook stock right now is a stock that trades around $133 a share. It has a market cap right now on it of less than $400 billion. Why do I love this company so much? Why do I think this is going to be a great play for the long term? Well, there are a few things you got to understand. Most people think of Facebook, they think it's just like the Facebook platform, and if you buy Facebook stock, you're just buying the Facebook platform, and that's what you get, when that's completely false. Yes, you are getting the Facebook platform, which is a massive group of people. We're talking about 1.5 billion plus people use the Facebook platform, okay, and that's on a daily basis. Then you get the Instagram platform, which has over 1 billion people using it right now, and that one is growing very rapidly. That's the hottest social media pretty much out there. You have Facebook Messenger, which has over 1 billion people using it. You have WhatsApp, which is another service that has over 1 billion people using it. Like these are, you know, platforms are just ridiculous as far as the scale goes, okay? So you're getting these massive, massive platforms. Then you get Oculus, which has a great chance to be the leader in virtual reality. Literally, they have a great chance to be the #1 player in virtual reality long term. When I look at what Oculus is doing versus what the other guys are doing, I think Oculus, it's going to be a huge year of growth for Oculus in 2019. And then you get all these other businesses that they're building off of their current platforms or future platforms, as well as Facebook could end up buying up other socials. If they see something as a competitive threat, they could try to actually buy that social and put that into their platform, okay? So when I look at Facebook, you're looking at a company that has a scale that's pretty much unprecedented in the history of humankind. Like, it is unbelievable how many people are using at least one of their platforms every single day, if not multiple platforms every single day around the world, all right? Now, this is a stock that has a forward PE right now of 17 on it, which I think is an absolute joke. For Facebook, with the growth they should have coming forward, to have a forward PE of 17 is rather silly in my personal opinion, okay? When I look at this company, ad rates will absolutely keep going up. They've been going up for years since basically Facebook started. They're going to continue to go up for a long, long time in the future. That's just what ad rates, does across every single industry. And what you're going to see on the Facebook platform, the Instagram platform, you're going to see a lot of the big major advertisers that really haven't spent a lot of money on, Facebook and Instagram and some of those platforms yet. You're going to see more and more of those come over the next, half decade to decade, which will end up pushing up ad rates, because right now you can see a lot of ads that are from maybe local businesses or small businesses or just random people and whatnot. Guess what ends up happening? Like you don't watch TV and see, just random ads like that, right? You put on an NFL game, you're going to see major advertisers. All that money is going to continue flooding over to Facebook and Instagram over the next half decade to decade. That's going to push ad rates way up. Also, the amount of ads across their platforms will go up over time, and that's a great situation for profitability, and that will make profitability go up a ton, and a forward P of 17 is pretty much a joke. I love a great balance sheet, and Facebook has one of the best balance sheets out there, okay? We're talking about well over $40 billion sitting on their balance sheet just in cash and investments. Over $40 billion, and they have no debt on that balance sheet. That's about as clean of a balance sheet as you can possibly find out there. I love that. I love a great balance sheet. One, you have money around to make acquisitions. 2, if it's a rainy day someday, you got plenty of money laying around, okay? They got a massive buyback on right now. They just added about another $9 billion to that buyback. So basically, they can purchase more shares from the open market. It'll make EPS look even better, along with profitability and their net income income hopefully going up and up and up. Then you buy more shares back. It makes EPS look better and better and more, profitability for each shareholder out there. I love that. You get Zuckerberg and Sandberg, okay? I think this is one of the best combos of business people ever, all right? Zuckerberg and Sandberg, and obviously they come under a lot of fire. Some of it is fair fire they've come under. Some of it is honestly the media just putting out as much negativity around Facebook as possible, because as Facebook's platforms continue to steal money, they're stealing money from all the main medias out there that historically had all those ad dollars, okay? So some of the negativity is they deserve it, and some of it honestly is just things that are overblown. So Zuckerberg and Sandberg, this guy built arguably the most powerful company in the history of mankind from a dorm room, okay? Arguably the most powerful company in the history of mankind, he built it from a dorm room. Like that's probably a guy I want to invest in, okay? And Sandberg is probably the best businesswoman in the history of businesswomen. Like when I look at what she's done on the business side of Facebook to expand this company, it's really unparalleled when I look at pretty much any other businesswoman in history, okay? So that is a great team, and they do a lot of very successful things, okay? The spend slowdown. So they've been spending a ton of money. Facebook's been spending a ton of money over the past few years because they needed to get more security, more people, basically employees for privacy and whatnot. And that has hurt profitability growth in the short term. Revenue growth is still very strong, but as far as profitability growth, it's been hurt because they've had to hire so many people and do so many things like that. That spending slowdown should start probably toward the end of 2019 and start going into 2020. The spending amount of it should slow and slow and slow. So that's going to end up being another thing that pushes up profitability when you're looking at 2020 and past. And last, I think this will be the company that has the biggest market cap of any company in the world in 5 years' time. I think so much negativity has been baked into Facebook stock at this point. Doesn't mean it can't go lower in the short term, but just when I look out over the next 5 years, I have a hard time seeing another company that will be bigger than Facebook, and that includes Apple, that includes Google, that includes Amazon, and those are kind of the three big dogs, in Microsoft as well. You kind of got Apple, Amazon, you got Google, and you got Microsoft out there. When I kind of look at it over the next 5 years, I have a hard time seeing that any of those companies can actually be bigger than Facebook when I look at the scale and when I look at all the trends going for them, and when I look at how little competition they have in their space. When I look at all those other companies, there's so much competition. When I look at like the socials and how powerful these are, and I look at the other services out there, there's just no real competition out there for Facebook. It's like they're playing in their own game. So that's why this is the first stock I'm planning on buying more of in January 2019. Let's get into stock number 2. Stock number 2 I'm planning on buying in the month of January 2019 is Eli, which is known as Callaway, okay? Ticker symbol Eli. This stock I bought some of in the beginning of 2018, okay? January, February, I started initial position in the company, and the stock just started going up like crazy. So I never really got to build a really massive position like I wanted. Well, lucky enough, the stock has fallen a lot, and now I get my opportunity to buy Eli shares heavy, all right? Eli is a stock that's at $15 right now, and it's a teeny tiny market cap of $1.4 billion. So we just came off of one of the biggest companies in the world, of Facebook. Now we're talking about a really small market cap. $1.4 billion market cap is really small, okay? What I love about this company is it's not like you're just getting Callaway. So Callaway is one of the biggest, you could make an argument that they're the most premier golf brand in the entire world. Callaway is, okay? And that's what it used to just be. It used to be if you were buying Callaway stock, that's all you got. Well, nowadays it is very different, all right? They acquired Travis Matthews about a year or two ago. That's a very successful acquisition of a higher end clothing brand. They acquired OGO a couple years ago as well. Now they're trying to close on Jack Wolfskin, which is kind of like, I would call them almost like a North Face type company, but in Europe. Jack Wolfskin is huge, and they also have a big Chinese business as well. And then they have a major investment in a company named Topgolf, which makes these unbelievable places that are so fun to go to. And they're like a driving range, but like 85 million times better than a driving range. It's got TVs, and you hit the ball, and it's got electronics in the ball and whatnot that can, sense where the ball goes. It is a lot of fun. It is like one of the coolest places you can pretty much go. And they have almost a 15% ownership stake in that business named Topgolf, which is expanding all around the world right now. So when I look at Callaway's business model, it is a very diversified business model now, which I love, because it's not just like, oh, if golf is weak at a particular time, their entire business is weak at that time. Now they have all these other businesses to offset, and let's say golf is really strong, but these businesses aren't as strong. They can kind of offset things, what I think is a great thing, okay? Also, market expansion. So they've acquired all these companies, and the Jack Wolfskin still has to close. That should should close within a month or two. But all these businesses are strong in different markets. So Callaway's a pretty big brand around the world, but mostly North America, all right? That's their main market. Travis Matthews is almost 100% North America right now. If I look at Jack Wolfskin, that's almost 100% Europe and also a little bit of China in there. So when I think about the way they can expand into China over time, I'm thinking they can learn a lot from Jack Wolfskin, what they've done there, and expand Callaway and Travis Matthews into those markets over time. We know a lot of the Chinese people love luxury goods. I think Travis Matthews could be a great brand for China over time, all right? And also Topgolf is expanding around the world. So I think they can use the learnings of these different markets, to kind of, expand those businesses into the other markets. Jack Wolfskin could have a great opportunity to expand in North America. It's basically they get almost no revenue from North America right now. I think that can change over time, all right? So they get market expansion and also they get these profits from all these different businesses where they can invest them where they need it. So let's say they're making a lot of profit from Jack Wolfskin and Travis Matthews. They want to go ahead and take that money and reinvest it into Callaway at a particular time. They can, or buy a bigger ownership stake in Topgolf. They can. The company right now with a forward P of 13, which I think is really, really low considering how much growth a lot of these businesses they own have over time. I think a forward P is just 13 is just too low for this business overall, all right? And then, so that's very exciting. But then we look at the Tiger Woods effect, and this is one of my bullish theses I had back when I first started buying the stock back in, I don't know, January, February of 2018, was Tiger Woods was coming back to golf, and it looked like he was going to probably be healthy again. His back is back good again, and sure enough, he came back last year, and his back is good now and whatnot, and ratings went through the roof. If you look at ratings for any tournament Tiger Woods played in 2018 versus all the tournaments he missed in 2017 and 2016, you're going to see that ratings with Tiger Woods go through the roof, okay? It's just the biggest name in golf. He's a Michael Jordan of golf, and people want to see him play, okay? And he's playing really good again. That's great for ratings. When ratings are really good, that means golf interest is really high, which helps out their main business, which is Callaway. When golf interest is really high, people buy a lot of golf stuff. Callaway had amazing numbers all throughout 2018. You can look back at their numbers. They showed growth across the board, revenue, profits. It was an unbelievable year for Callaway. I think as long as Tiger Woods continues to play well, he doesn't necessarily have to be the old Tiger Woods, but as long as he plays well, that gets a lot of people interested. He can be healthy. That just produces a lot better numbers for their main business, which is Callaway. So when I look at all this, I'm very bullish on this company over time. I love the way they've diversified their business model. I love how much growth opportunity this company has over time. That's why stock number 2. Let's get into stock number 3. Alrighty guys, stock number 3 is arguably the most undervalued company in the entire stock market, I feel, as of right now. And this company is named Skyworks Solutions, ticker symbol SWKS, okay? Right now the stock is around a $67 stock and it has around a $12 billion market cap. So decent sized company, but nothing too crazy. This is a semiconductor company, and almost every single company that makes electronics products is probably a customer of theirs in some form or another. Okay, if you talk about Apple, Samsung, Huawei, pretty much almost anybody out there, if you're talking about connectivity in a semiconductor company, Skyworks Solutions is more than likely, one of their customers, all right? They're in pretty much everybody. They do have content opportunities to still expand to some other customers and whatnot, and also into their current customers, get more content wins inside those smartphones or other electronic devices. Right now, this company has a forward P under 10, which I think is absolutely ridiculous, considering how much growth this company should have in the future. So if we look at their content opportunity, and this is from their company's website, I'm kind of like, if they look at like a 3G smartphone, what was their content opportunity into a 3G smartphone? It was around $8 opportunity for them, okay? So basically meaning in a 3G smartphone, if they won the bids for basically putting their semiconductors into those phones, they could get about $8 for that smartphone. In the 4G area, that's gone to 18, so well over a double up. This is a massive difference, okay? So any type of 4G smartphone out there, Skyworks is making a lot of money if they're in that phone, okay? And if we look at the 5G opportunity, we're looking at somewhere around a $25 opportunity per phone sold if they get those sockets that they're planning on getting, okay? So you're looking at, let's say they get all the sockets they need in an iPhone or a Samsung or something like that. They could basically be making around $25 per every iPhone sold or Samsung sold or something like that if they actually win all those sockets, okay? That's a massive, massive opportunity, and when you times that out by hundreds of millions of smartphones sold a year, you're going to understand that this is a lot more money. And keep in mind, this is kind of their initial estimates, you know, on 5G. I'm sure over time that number is going to be able to increase and increase as they can get more content and whatnot, okay? So a big difference there. They also should be the leader in 5G. When I kind of look at like the 3 to 5 like major companies that have a huge opportunity to expand their businesses in 5G and are well positioned to expand their businesses in 5G, I look at Skyworks as being one of those 3 or 5 businesses around the world that has a great opportunity to dramatically increase their business with 5G. And 5G is just going to be so big, guys. It's going to be so big for the overall economy. It's going to be so big for pretty much any electronics company out there. The speeds are just, you know, ridiculous on 5G. It's going to allow, you know, cars to be able to talk to each other and basically figure out, you know, self-driving modes so much easier. It's a whole game changer. If you haven't studied 5G, get on it, okay? Also, if you think in connectivity, think Skyworks Solutions. So 5G, all these devices are supposed to be talking to each other and connecting. Everything's going to be connected to each other. If you're thinking about connectivity, you got to think about Skyworks. They're one of the biggest players in connectivity, in connecting all these devices, all right? And this is a proven management team that has done a phenomenal job expanding this company over the past decade. This stock used to be a $5 or $10 stock, you know, about a decade ago, and this management team has done an amazing job of growing this company over the last, you know, 5 to 10 years. It's been, you know, astonishing what they've been able to pull off. So great management team there. Over $1 billion of cash and investments on the balance sheet. They have no debt. You guys know I love a great balance sheet, especially when you're a semiconductor company because things can be so volatile. I love that balance sheet with Skyworks Solutions. And they also, I'm not a big fan of dividend yields. Like usually I don't care, but this one does pay a 2.3% dividend yield as of right now, and they pretty much increase that every single year. So if you're buying into the stock and they kind of, you know, can do everything they're supposed to do, they execute on 5G, they continue to grow this company. It's not like I should just get a gain in the stock price. This dividend yield should increase and increase and increase over time, or at least the amount of money paid out in that dividend should increase and increase over time. So I'll get fatter and fatter dividends, you know, 5 years from now than what I'm getting today. Let's put it that way. But a 2.3% yield is a 2.3% yield. In a time when the market's not doing much, a dividend yield like that is nice, especially when it's got the type of growth opportunity a company like Skyworks Solutions has. So those are 3 stocks I'm planning on buying in January 2019. I want to hear your guys' opinion down there in that comment section. Do you like these stocks? Do you not like these stocks? What stocks do you guys plan on buying? We'd love to hear from you guys. Always hit a thumbs up if you enjoyed this. Thank you for watching and have a great day.